You write about bonds. Be wary of bonds. Nothing from the past days tells us that there won't be a lot of spending, just the direction of the spending will be altered. You're talking about what happened in terms of the debt ceiling debacle, which pretty much went silent once they passed through this clean CR. Do you think it's going to be the bond market that is the ultimate check of power in 2025 when it comes to Washington, D.C.?
I think it will be, right? It's become, the interest expense is already a big part of the deficit. It's growing. It's going to continue to grow. And the bond market, I think, is very wary, right? How are we going to pay for all these things? I think everyone out of the corner of the eye is still looking at Doge and saying, okay, maybe something gets done there. I think that's the bright shining light that's kept markets somewhat in check is, well, if Doge can really get some efficiencies, maybe we don't see the deficit balloon. Everything else, though, I think is just telling us this deficit's going to go higher, and that's problematic.
Do you see any fiscal hawks left in Washington, D.C.?
Apparently, maybe, what, the 27 Republicans who voted against the CR? Maybe.
38, I think.
38, so yeah, yes. Maybe that's it. There is no one, it's all a matter of where they spend or tax cuts. And again, DOGE seems to be the one thing, maybe that's where they, eke out some gains and do something about the deficit. I just don't see that happening very cleanly or very quickly.
You also say that there's hope of discipline, but, quote, the swamp seems well entrenched, so I see consistent upward pressure on bond yields. T. Rowe Price is talking about maybe 5%. Some people are even saying 6% on the 10-year yield. Do you think we can reach those levels?
I certainly think 5%'s, in the cards. 6% might be high. We'd have to see some of the policies actually get implemented. But, yeah, I think 5%'s pretty realistic. Don't forget also, we might see some inflation pressures come back again. One, people were buying goods ahead of the tariffs or potential tariffs. You're seeing that. You're seeing the economy still move along reasonably well. It's that shopping season. Plus, I do think there's been an artificial bias to the data, pushing things higher than they really are in terms of jobs and inflation January, February. So that could spook the market as well. 6% seems high, though, unless we get really aggressive policy.